There have been a bunch of changes with the $40,000 grant that the state of California is offering for building an ADU, or the pre-construction cost for an ADU. But these are expensive, and so you need the rest of the six-figure budget. It's still something, unless you're building up like the piggy bank that we all hope we have six figures somewhere in the mattress. You might still want to find the best lending option for you. And the lending options used to be super limited. They used to be only construction loans. But now there's a lot of options, nearly any lending option you can think of. Charles Eddington from RenoFi is coming on to talk about some of the alternatives to construction loans and some of the common occurrences he sees when people are trying to figure out how to finance their ADU and get this grant. Hey, Charles.
Hey, Ryan. Thanks for having me.
Have you been talking to a lot of people about the CalHFA grant so far?
Yes,
Yeah.
a lot. And it seems like every day, every week, just we get a little bit more. And so, a lot of myths and rumors and misconceptions, and definitely looking forward to kind of drawing a little circle of truth around all this.
Well, why don't you start there? What is the circle of truth? If you want people to walk away with one nugget of information, what is it?
In general, so the Cal HFA grant is available regardless of the lending institution you work with, regardless of whether even you have a loan. If you walk in with cash, you've been gifted some dollars from a friend or a family member, or like you said, you've got it laying in the mattress, you can absolutely walk up to the to the window and work with HPP Cares, who's the new special participant with Cal HFA, and have access to the grant.
That's a good nugget for people to have. But because it's important because the grants existed since September last year, and now it's August, so almost a year. But for most of that time, that hasn't been true, right?
But yeah, when the grant first launched, you could only get the grant by working with a Cal HFA approved lender, and those lenders were primarily offering the down payment assistance purchase loan through Cal HFA, which is a phenomenal program. Unfortunately, these are primarily first mortgage lenders, right? A lot of really good companies on the list if you go look through there. However, at a time when interest rates have been in the twos, for a lot of people over the last couple of years, with the recent spike up in rates, to access a $40,000 grant on, say, a $500,000 first mortgage loan, taking your interest rate from 2.75 to 5%, it's going to cost you tens of thousands of dollars a year in interest, and in addition to closing costs and frankly, just going through the hassle of a refinance
Yeah.
just to get the money. And so, the juice wasn't worth the squeeze. And so just in the last few months, we've seen a lot of those restrictions lifted. We've seen the income limits increase. And then just recently, basically, again, you can come in now with HPP Cares, and whether you take out a first mortgage, second mortgage, have money under the mattress, what have you, you can absolutely walk up, apply through HPP Cares as a quote unquote, cash option, and access the grant.
Now, if somebody's a client with Renify, what kind of journey are you seeing? What kind of lending products do you see them picking?
Yeah, that's a great question. So it is August 25th. I hope in the next couple of weeks to have a very exciting announcement regarding the whole progression here. But the important thing is today we absolutely have a mechanism to work with Renify on one of our products and get access to the grant. Primarily at Renify, so we are a renovation lender offering second mortgages, and so primarily you're looking at a home equity line of credit or a fixed rate second mortgage. We can get deeper into the products whenever you see
Mm-hmm.
fit. Generally speaking, people are coming to us looking for a second mortgage based on the after renovation value of the property. And so our products, what sets us apart, what makes us very unique, is that similar to a first mortgage renovation loan or a construction loan or a lot of other programs that are similar, we offer a second mortgage based on the after renovation value. And so we'll allow, which there are a lot of people that want to build an ADU. They go out and talk to a bank or a credit union looking for a home equity line of credit, and they've got 20% equity in the home, but that's not quite enough. They can borrow maybe 10 or 15%, and that gets them, $150,000, but they need $250,000, right? And so we'll allow a borrower, a well-qualified buyer or a borrower, to borrow up to 90% of the after renovation value or after ADU construction value of the home, up to 125% of the current value of the home.
Hmm.
And there are a couple other unique features in there as well, but in general, that's what sets us apart is our ability to lend based on the after renovation value of the home, which essentially allows you to access your future equity upfront.
Yeah, that makes a ton of sense. Okay. So I talked to a lot of homeowners they've either bought or refinanced their home in the past couple of years, and they just don't have enough equity to complete a project. Like you're saying, they're under 20% maybe, and so it's just not enough to get them there. You guys are going to come in, look at the future value that they're creating, and actually acknowledge that and use it to qualify them for a larger amount of money.
Absolutely. And then kind of to take it a step further is yes, absolutely. And we look at the borrower, as do our credit union partners, as if the construction had already been complete. And so even if you don't need to borrow more than your property is worth, let's say that you do have enough equity, but you're borrowing 90, 95, maybe even 100%. Some really aggressive products will allow you to borrow up to that. Um, on a home equity line of credit or a fixed second mortgage, your interest rate's pretty much based on two things: your credit score and your combined loan to value ratio, meaning your first mortgage plus your second mortgage divided by the value of the home. And so let's say you're at 95% CLTV, combined loan to value. You might be looking at so home equity line of credits, for example, are based on an index and a margin. The index we all use is prime. Currently, today's prime is 5.5%. So if you're prime plus one, your interest rate is 6.5%. Well, if you're say 80% combined loan to value, you might be prime plus one. You're 95% combined loan to value, you might be prime plus 2.5, right?
Yeah.
And so even if you don't need to access all of that equity, working with us the way that we operate, you might get an interest rate that is significantly lower than if you went with another bank or credit union who looks at you in today's world instead of in the future.
Yeah. No, that makes a lot of sense. So even if I'm not accessing all that equity, just having that much overage based on the future value, it might get me a better rate. And that's how you guys are
Absolutely.
competitive and create some value. How does a homeowner figure out if they're in that boat and they could really use a Renify product, or if they should talk to a conventional lender? Do they shop both options? Is there like an early call? Is there like a guidance point?
I always recommend. I don't think there is a time that's too early, or an option not worth considering, right? So there are a number of different ways to finance an ADU. We because we represent several different financing options. We can compare, say, a fixed second mortgage versus a home equity line of credit. We have a few different home equity line of credit options that have different, for example, one, you can draw on the funds for 2 years and you can lock in the interest rate after that. Some remain, a standard home equity line of credit is going to have a 10-year interest only draw period. Then it converts to a 20-year fixed after that. We have 15, 20, even 5 and 7 year and 10-year fixed options. So we can help you really explore your options there, as well as we even have an unsecured personal loan that's not tied to the property. So if you only need, say, $100,000 or so, it's a really quick, easy way to gain access to
Mhm.
those funds. And you're looking at 15-year fixed rates in the sixes and sevens on something that's not secured to your property, which is pretty phenomenal.
Yeah.
But we also, and so yeah, I'm the account executive for Renify. The other part of my role is I work with several different lenders across the country and specifically in California to really build out a network of experts specifically on renovation and ADU lending and construction lending. And so, for example, if someone's in San Diego, I have two loan officers right top of mind right now. Where if you come to me, you're looking, especially if you're looking for the grant, and you really are a better fit for a renovation loan. For example, we're more of an A paper shop. Credit unions tend to be a little bit more conservative on
Mhm.
qualification. But if you've got a 660 credit score, and
Mhm.
you could qualify for another loan, I can absolutely refer you to someone who we know, like, and trust, to help you explore your first mortgage options. And if that's the best way for you to go, great. We're absolutely more of abundance mentality than scarcity over here for sure.
That's the key to the choose your own adventure, right? So how does somebody start that choose your own adventure? Like, what do you actually want them to do?
Yeah. So best thing to do is we do have, and I think Ryan, you're gonna drop a link, but there's a landing page that we've created specifically for people who are looking to come through and perhaps explore the grant or even just finance an ADU. And so we have a team of renovation advisors where we'll obviously talk to you. So you go through the website, click on the link, schedule a call. We want to be really respectful of your time. We try to keep things to about a 10 or 15-minute call, but really just going into the generalities of who you are, where you are, how things sit today, what you're thinking about doing, where you are in your journey. And once we've had that conversation, we might not even really get into the products all that much. It might be, well, hey, here's where you need to start. Let's start with, is it even possible to build an ADU where you live? Based on your municipality and the codes, and are you going to be able to pull the permit that you want, right? And so we work with several different ADU builders and other companies who are thought leaders in the space that can really come in and help you explore that. But then obviously we're going to want to look at, can I afford this? What would my payment be? What does this all look like? And so our renovation advisors are going to walk you through the process at the beginning, and then put you on the path to basically, whether it's engaging with a builder, contractor, any design firm, architect, et cetera. We just want to enable and empower all of these homeowners, to start their journey on the right foot.
Cool. So if super non-committal, the landing page link will be in the video description below or the comments if you're on another platform. And then there's a link. There's a bunch of information on that landing page, and then there's a button to book this 15-minute call.
Yes.
And there's no commitment. It's not like a hard credit check. It's just a conversation.
No, not at
And
all.
and then if there's no such thing as too early in the process, as you're like call
Oh,
us.
yes, absolutely. And yeah, we would much rather talk to someone and have a meaningful and impactful conversation. 12, and this is very common, by the way. So we lend on any number of renovation projects across the country. Someone might think they want to, and myself included. My 8-year-old is not necessarily enjoying the bunk bed setup with her 5-year-old sister as much as she used to. Looking to add a bedroom, but it's probably going to be a year plus, in the future. But obviously, I know a little bit about renovation financing. But if I didn't, I think it would be really comforting to have a conversation with someone about it, even if it was far in the future, so I can start planning ahead.
Yeah, absolutely. And is there such a thing as too late to have the conversation?
I mean, yeah, if you've done so, not as much for ADUs. I mean, obviously, I feel like it's you don't want to have half an ADU built, right? So one thing to keep in mind is, so the way that we derive that after renovation value is we do order an appraisal on the property, right? And so we're looking at a few different things. One, what's the current value of the property? And two, what's the after renovation value of the property? Well, if you have, and is it habitable, right? And are there any red flags? And so a half-built ADU, with a torn up driveway, et cetera, and pipes sticking out of the ground, that doesn't do wonders for your current value, right? Appraisers don't really like that. So yeah, I would say certainly earlier rather than later. But if you find yourself stuck, maybe a financing option, didn't work out, you ran out of cash. I mean, this happens all the time. A lot of times we'll come in, even if we're not ready to do a RenoFi loan, we'll come in with one of these unsecured loans that we offer, get you to the point where you can, like, let's fix this up. Let's put your kitchen back together, right? Let's get you to the point where now you can get back on track, and then we'll start talking about the long-term solution. So I guess there's not a too late, but I would certainly err on the too early versus the too late.
That's good advice. All right. So you talked about some of the misconceptions that you've been hearing about both the grant and just financing ADUs in general. Do you want to talk about some of the biggest boogeymen out there? Like what do you just wish you could banish?
Yeah, I mean, there are a couple things that are just really top of mind, and I think a lot of it just comes from the newness of this, and the fact that so many things have changed with the grant, and some of the, just some of the narratives that I've seen, and some of them even exist, within the comments if you read through in the group, right? But number one, yeah, you do not have to refinance your first mortgage. You do not even have to take out a mortgage at all to access the grant. So that's number one. And so I know a lot of people have hit the Cal HFA site. They called, I mean, I've seen these posts. I called every lender and every single one of them said I had to refinance. Like, you absolutely do not have to refinance. If you love that 2.5% interest rate you have, keep it. And so you
Mhm.
can take out a second mortgage. You can do any number of things to access the grant. So that would be number one. Number two is just simply really kind of the qualification process. I think a lot of people think that you just have to have perfect credit and all this equity, right? And so specifically, those people that have gotten over the hump of, well, I looked into refinancing, but the lender told me I could only borrow up to this percentage. And then I looked at a line of credit or a second mortgage, and they told me I could only borrow this amount, and it's not enough. Well, again, that's where we come in, and it's that you can access that future equity up front. And again, that's what a renofi loan is all about. You can also do that on a first mortgage. There are some first mortgage products like the 203K, like the Fannie Mae Home Style. So if you are someone who might benefit from a refinance, I would absolutely encourage you to look at those products as well. But for that individual that does not want to refinance, then definitely take a look at the type of product that we offer, so you can actually access these funds. Another thing is so speaking about qualification, debt to income ratio is a big one for people. Where, hey, I've got a good income, my credit's good, but man, adding a $250,000-$300,000 debt to it kind of throws me over the number. And so some people are building, I mean, there are any number of reasons to build an ADU, right? But especially with the spirit of the grant, and what we're trying to do with SB9, and just working on the density, right?
Mhm.
A lot of people are going to rent these out, right? And so, just some statistics in the Bay Area. 2,700 a month is about an average rental for a one bed, 3,600 a month for a two bed. So there's obviously a great deal of cash flow
Mhm.
available. We do have the ability to use that future rental income on the ADU to help you qualify. And so basically, what we do is, on the appraisal that we order the same appraisal with a current value and an after renovation value. And then we order a separate rent schedule. And so we're going to ask that appraiser to go out and assess the market rents for an ADU. By the way, we do a lot of work up front on these appraisals, right? So we really, really try to give the appraiser all the way down to what fixtures, what countertops, just what faucet are we going to put in this property, so they truly understand the story of, like, this is what's going to go right there. And I think it can rent for X, right? And so we take that rental survey, and let's just say it's, just for easy numbers, let's just say it's 2,000 a month of rent, which would be really low. We take 75% of that. And so 75% of 2,000 is $1,500. We would take $1,500 and add that to your qualifying income to help you qualify. And so, especially for a lot of people, and by the way, we can do that even if you're not borrowing on after renovation value, right? Even if you've got tons of equity, great credit, you can access whatever you want. You just don't quite have, that the income, right, to get over the hump. That feature by itself is really helping a lot of people access that, future cash flow thing, helping people age in place.
Yeah.
We even see a lot of people moving into the ADU and then turning around and renting out their primary residence, which we can't count that income, but we can count the rental income from the ADU.
Interesting. Yeah, it's a huge deal too, because like even with the changes to the Freddie Mac regulations that make it so that they can include some of the rental income from ADUs, there's still lots of limits on it, right? It's only Freddie for now.
Hmm.
It's also only like 30% of your overall income can be coming from the ADU's rental. So if you're a fixed income senior aging in place, you actually can't get more than 30% of your overall income coming from this rental unit, even though the rental unit might be, like you're saying, 3,600 a month. So the
Hmm.
fact that you guys have that freedom, that could be another really interesting use case for people, grant or not,
Right,
on the whole
right.
project.
Yeah, and so all these things are mutually exclusive, right? So borrowing based on after renovation value doesn't have to be coupled with the grant, doesn't have to be, included with the future rental income. We can really kind of mix and match according to what you need. I don't think I mentioned it before. So our max loan amount is 500,000. So that's pretty substantial second mortgage. We do have, if you do need the future rental income, I think we are capped at 400,000 on that. But realistically, if you're needing the future rental income, you're probably going to be within that limit anyway, and hopefully have access to the grant as well.
Yeah, well, that makes a lot of sense. So last week, somebody posted on this channel that like they were working with one of the CalHFA approved lenders. They were all on track to get the construction loan that they needed, and then the lender sent out an appraiser, and the appraiser said that the ADU would be worth 15 grand
Hmm.
total. That's what the comment
Okay.
was, which that's obviously a horror
Was it a
story.
Toyota Camry?
Yeah. Yeah, they were not even a tiny house on wheels. It's a used car in the backyard. Now,
Yeah,
like
right.
that's what the appraiser came back with, right? And that's a horrific sounding story. How do you make sure that doesn't happen?
Yeah, no, that's a great question, and I think and this is where any lender you choose to work with, whether it's first mortgage, second mortgage, whatever, make sure they've got expertise in renovation and or construction lending, because it is a different product, it is a different process, all the way down to and the appraisal is honestly everything hinges on the appraised value, right? Both on the after renovation value and current value, and then like I mentioned, that market rent survey. If the appraiser is not doing a great job, or maybe doesn't have the right information, they're going to have to kind of make up the story on their own, and so that's the last thing we want to have happen. So what we do is, again, we're doing all the contractor due diligence, and really digging in deep, and that's kind of our secret sauce, is what we call we have an automated underwriting system called RU. And so we take in, again, we're a fintech, right? So Fannie Mae and Freddie Mac, FHA, VA, they've all got their own automated underwriting systems, and they're good, but they're fairly archaic. They ask for a lot of things that really aren't that important, and maybe don't ask for some things that are. And so we've really taken the best of all those, and wrapped them into one, and just worked with a lot of different data points to make sure that we're stressing the right things. But to answer your question, probably the most important thing that we do in preparation for that appraisal is truly tell the story, and we don't leave a single page unturned. I mean, this is what the this is what the switch plate covers are going to look like. It's exactly these countertops, right? And so one other piece to keep in mind, and this is a little bit aside, but if you're building an ADU that's a 10 out of 10, but your house is a 6 out of 10, you might really want to think about you know kind of evening that out a little bit. And so frankly, we see a huge value gain in, like, if your kitchen's from 1985 but your ADU is 2022, you might want to catch that kitchen up a little bit, just so you're not putting lipstick on a pig, so to speak, right? We really want to, it helps to be kind of holistic about the total viewpoint. But yeah, I mean, telling that story, and really making sure the appraiser fully understands what's going on here, with a well presented package of this is exactly what it's going to look like. Now, granted, a $300,000 ADU is not necessarily going to raise the value of your home 500,000, but it's definitely going to be more than 15,000, right? And so part of it's the market, and whether or not ADUs are mature in your market. If you're building the first ADU, you live in a smaller town, especially, maybe you're out in the foothills or something, and it's just not common in your area. There might be a little bit of a pill to swallow there, where you might not quite get as much value as, say, an area in Silicon Valley where ADUs are popping up, pretty regularly. And keep in mind, appraisers are also looking at sales, right? And so maybe ADUs have been built, but they haven't been sold, right? And so it's difficult enough for an appraiser right now to determine value, even on a regular purchase. um, but to ask them to do all these things, and then not tell them the story, you can't let the appraiser make up their own narrative, because it's not that they're not doing a good job, they just don't know, and they don't know they don't know.
Yeah, and they're like conservative by trade, right? Like they're
Well,
trained to
naturally,
be.
naturally, yeah. I mean, the USPAP is the policies and procedures for appraisers. Pretty much, pretty much says that, right? Like, you're not to be aggressive unless you have the information available to be aggressive. Well, guess what? We're going to give them the information available to be very confident in being aggressive.
All right, that's super helpful. If people have other questions, there's a link in the description so that they can hop over. Renify is actually sponsoring our Facebook group and this week, and so you can. There's a whole thread where they can answer all your questions. You can get Charles yourself in a little Ask Me Anything situation, and then I'm gonna put video up here with a bunch of misconceptions about the grant with a few different lenders, a few different brokers, a few different fintechs weighing in and sharing their knowledge about some of the biggest misconceptions. So definitely check that out too. And thanks for coming on the show, Charles.